Building an investment portfolio shouldn't mean logging in to manually pick stocks every single week. It should run like clockwork. We are going to build a custom 5-stock dividend portfolio completely from scratch and schedule your first $500 automated investment. This is what your dashboard should look like to start. Before we begin building, you need an active account, a linked bank, and cash transferred over. As you can see by this uninvested cash metric at the top of the screen, our money is sitting ready to trade. Setting up this specific environment removes the friction of logging in and manually buying shares. It turns a weekly chore into a disciplined machine that operates in the background. Step 1. Go to your Research tab, open the Pie Builder tool, and click Create. Go ahead and name this new creation Dividend Portfolio. Beginners often make the mistake of sorting by the highest dividend yield and buying those companies. A massive dividend payout is frequently a warning sign that a company is struggling and trying to artificially attract investors to stay afloat. To avoid that trap, we use the search filters. Set the dividend yield strictly between 0.5% and 4%. Capping it at 4% creates a safety parameter. It filters out desperation payouts, leaving companies with enough cash to reinvest in actual growth. From this newly filtered list, you can safely select 5 solid companies. As you browse, pay attention to the market cap and price-to-earnings data points to confirm their stability. For this tutorial, let's select a mix of steady performers. Add Microsoft, JP Morgan, Exxon, Costco, and Johnson & Johnson to your pie. By forcing our selections through strict mathematical parameters, we remove emotional guesswork. This method shields a beginner's portfolio from dangerous value traps. Now we assign weights to these companies. This platform operates on a strict 100% rule. Every portfolio and sub-portfolio you create must perfectly balance out to a total of 100%. Set your 5 newly selected stocks to a target weight of 20% each. You now have 5 equal slices making up the whole. Because of the zero-sum constraint, if you want more of one stock and increase its weight to 25%, you must reduce another down to 15% to maintain that 100% total. Check the counter at the top of the screen. Once it confirms your balance is locked at exactly 100%, save the pie. Step 2. We need to integrate this newly completed pie into your master portfolio dashboard. If you try to add it immediately, the system will trigger an error. Your master portfolio is already sitting at 100%, and the platform will reject the new pie because it pushes the total over the limit. To make room, click into your existing main portfolio slice and drop that allocation down to 99%. Now, assign your new dividend portfolio a 1% allocation. The math is complete. Go ahead and save to confirm all changes. Constructing a pie within a pie allows you to scale up an incredibly complex set of investments safely without ever losing mathematical balance. With the structure built, it's time to fund it. Navigate directly into your newly integrated dividend pie on the main dashboard. Click the Buy button, enter the $500 of uninvested cash we prepared earlier, and hit Submit. You'll notice the money doesn't move right away. Unlike a day trading app where market orders execute the second you click, this order remains pending. This platform relies on a morning trade window. It aggregates all user orders, executing them automatically at a set time the following morning. Shifting from real-time execution to scheduled trading windows is a deliberate feature. It forces a pause, prioritizing long-term investor discipline over emotional split-second reactions. To verify the system is working, click on your upcoming activity and trades tabs. You'll see this screen showing your $500 order clearly queued for the next morning. The automation doesn't stop with this first order. Any future cash deposits you make will automatically be split into fractional shares, perfectly maintaining the 20% weightings you established. You have successfully built and funded an automated, passive income-generating slice of your portfolio. This set-and-forget approach is highly effective for building wealth over time, but it doesn't serve investors who want the absolute control of executing real-time, active trades. Systems requiring zero daily maintenance are excellent for long-term growth, but if you want to learn how to manage active fractional trading, click through to our next tutorial on the Fidelity app, where we cover exact market execution.